Good morning, traders. It's 8 a.m. Sorry about the noise. Good morning, traders. Sorry about the issues here. Got some technical issues with the broadcast. Um, Thanks for joining this morning. It is 8:01 a.m. here on a relatively cloudy day in Chicago, coming at you from the financial district. Uh, Today, this is episode number 1614. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. One heck of a trade last night. We had about a 40-point drop in the S&Ps, and a rally after that. Actually, what is it? 50, yeah, no, it was 40 points. And based on the um, uh, news that the delegation from China, the trade talk delegation from China that was supposed to set up higher level talks with the U.S. administration, were leaving all of a sudden instead of sticking around for today for the actual trade talks. The market did not respond well to that. It dropped immediately. And then after that, there was follow-up news that the White House is making concessions, allowing some trade, some um, uh, 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 concessions involving the agreed currency agreement with China as a part of a trade deal, and then various other items. It seems like it's softening up a little bit. Also, President Trump has said he will allow some U.S. companies to supply non-sensitive goods to Huawei, which caused the market to come back to 29.20, 25 in the S&Ps. The theme, obviously, from that is this U.S.-China trade talks, which are supposed to get underway today. Um, there's rumors of potential currency accord as part of the partial trade agreement, coupled with a delay in the next round of U.S. tariff increases on Chinese goods. There's also a little bit of news out of the UK for Brexit, but I won't get into that. Everyone can look up the news. So we've had a pretty busy overnight session, and we're basically sitting sideways right in the middle of balance where we were yesterday. We'll go over that in a minute, but the overall market sentiment is slightly to the safety side, risk averse side. Really, it's a mixed market today. At the end of the day, even though we've had a big swing down and back up in the equities, we are back to just below break even on most products. The bonds are off 14 ticks. The 10 years are off 2.5 ticks. The Bund is off 84 ticks. But so are the equities. There's only the Russell that's up 1 point. Everything else is below zero, below settlement from yesterday. So overall, it seems like a market that is very, very tentative. Overnight, we did get some key numbers. Balance of trade from Germany came in at 16.2 versus a forecast of 14.1. Balance of trade out of Britain, negative 1.54 billion pounds. Core inflation came in at 2.4. Inflation rate year on year came in at 1.7 versus 1.8. And then looking ahead, we have Fed's Kashkari at 12:15 Eastern. There's a 30-year bond auction at 1 p.m. and then a monthly budget statement at 2 p.m. With Fed's Mester speaking at 4:30. So that's what's on deck. Nothing really earth-shattering, nothing big. The core inflation rate and inflation were key numbers that were released, and they were pretty much in line, not much of an effect from that. So that's where we stand. In terms of what was expected yesterday, now, the primary expectation, given what we left off the day before, it looked like to me, even though we had a bit of a bounce, that we are likely to move up. I was expecting a move up, and then I was looking for a sell-off that'll bring us down into 28.8275. Today's overnight low is about that area, 28.8175. That was the key target below. We hit it overnight last night. The secondary scenario is a small push up, pullback, and a grind up. And I projected somewhere around 34, 37 on the grind up. Here's what actually happened. Um, we ended up doing scenario 2 open auction with a push down, and then here's the grind up. Very tough trade, in my opinion, on the way up with a correction at the close, just like what was marked on the scenario. You can see the correction on the close shown here. This is pretty cut and dried stuff. I mean, this is typical auction process type stuff. The initial test, 24.50 against a 24.75. I did expect a rejection of everything above 22 on a first test, and that worked out pretty good. Ended up rotating back to the mid before grinding back up. Did not like yesterday's trade at all. It was just kind of slim pickings, so to speak. Almost like one of those days where it just rallies and rallies and rallies and rallies on low volume, low volatility. The volume yesterday, 895,000 versus 1.1, 1.2 million, um, which we would consider to be the norm. Pretty quiet trade. We did have a holiday, a Jewish holiday yesterday, as mentioned, Yom Kippur, and so that may have had some effect. This is the overnight session. There's your news on a China delegation leaving. And then there's the news on U.S. concessions. And then there were a couple other pieces in here. But we ended up coming back to the scene of the crime right up here. And then we've been holding sideways in the upper range. This trade right here would have been pretty much the session had we not had the news. This was very difficult, pretty wild to trade, and volume overnight, as you would expect, is pretty high, 467,000 versus around 150 or so thousand expected, about 3 times the volume. Uh, Double distribution profile. Point of control, if you note, the point of control last night is exactly the same as the point of control the prior night. We're likely to see a squeeze up from here, in my opinion, but this market is very, 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 very news contingent. The delta in the overnight session is pretty much zero, is pretty flat. The overnight inventory is pretty much flat as well. It was well short into that news, and now it's basically back to where it was. So the overnight inventory is generally flat. Not much to glean from there, um, except that we are just completely in balance with the prior overnight's point of control, yesterday's point of control, and here we are right at it again today, completely balanced. Balance is expected to lead to imbalance, and so that's what we're likely to see next. We're likely to see a break away from here. Here's the overnight session. This is the drop again, and it took everything that was in its way, and has returned, and we have basically a flat kind of trade overall. So here it is. When we look at it in the short term on full depth, we have a pretty noisy kind of order flow type situation. There was quite a bit of activity here on the selling. On the selling, you can see a lot of dots there. And every time it sells, there seems to be a lot of active buying that comes in on these sell-offs. It seems to be lifting a fair amount in those drops. In terms of liquidity, We have pretty decent liquidity up in the gap fill, the gap zone fill up in 34, 35. We have pretty good liquidity into 29.39 and 29.40, which is where I'm expecting this market to go next. Most likely, assuming no further news interruption. And I'm beneath here, 28.85 is the next area of liquidity. I don't have anything that coincides with 28.85, but I definitely do with 29.40 and 29.35. We do have um, some confluence there to trade against. So all I'm looking for, and you know, I did a video. I think it was 2 Wednesdays ago, maybe. I believe it was 2 Wednesdays ago with Bookmap, where I go over how I'm looking at this liquidity and lining it up with areas that are predetermined to be areas that I'd like to trade on. And then whenever I see liquidity in that area, I'm going to be aggressive because the market is showing me a track record of what the order flow was like, what the resting orders were like in that area of confluence. I expect that there's participation there. In case you're wondering what this is all about, this is a heat map. The product is called ctbookmap.pro. Go ctbookmap. You can go to ctbookmap.pro. You can get a 14-day trial. It runs very nicely on Rhythmic, where you get the full depth. And what it does is it colors in using this spectrum, depending on how heavy the liquidity is on offer. It colors it in. So the heavier liquidity gets a more and more orange and more red, versus areas with little liquidity showing up as black and then as dark blue and so on. The lighter the color, the more liquidity there is for that time period. It just records it over time. Anyway, so that's what that is. Let's take a look at what we're expecting for today so we can wrap up here. For today, pretty straightforward in terms of what we would want to play on today. We are opening right underneath the overnight point of control. Right underneath the overnight point of control, right underneath the prior day's point of control. We are in balance. The expectation today is an open auction that makes an attempt lower, and then I'm looking for an impulse or a push higher, and I'm looking for it to retest this 2450 area. Remember, this is around the micro composite point of control, and then eventually I'm looking for the market to start shifting up into that 35. There's liquidity at 35, so expect some turbulence, potential pullback and push into 40, where there's even more liquidity before it corrects into the close. So I'm looking for I'm looking for what type of action is taking place on the sell side. So how are they hitting the offer? Are they backing off easily once they've hit the off? How are they hitting the bid? I mean, in other words, selling. Are the aggressor sellers persistent and are getting price migration and price discovery, or are they backing off right away and allowing the market to push back up? In that case, I would be looking to get long and hold tight. On the long, I'm holding tight for 34, 35 initially. I'm hoping to get in somewhere around the 20s, early 20s, 2022 for the long play. The short play is scenario 2. That's the opposing play. Again, we're opening in range, in value on a balance day. So I'm looking for that to push into the overnight high, prior value high, run into some resistance, give up on the long side, start to move down, and then consolidate on a slow trade, and then start to move towards 2900. Mess around with 2900 for a little bit, and then start its migration down even further. In that case, I don't expect it to go too far without news. Again, none of this matters when the news comes in. So we'll see what happens, since today is a negotiation between the U.S. and China on round 342 of this negotiation, and we'll see if we get some sort of a deal or something. But overall, You trade the price that's in front of you, trade the action that's in front of you, and let the news do as it may. Make sure you have your stops in there. I encourage people to use hard stops so it takes you out on the news, so you can reset your mind and get back into reevaluating the market. Okay, that's what I have for you. Good luck today, and I'll catch you mañana. Take care.